Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Alongside me, my good friend Michael Fairborn in the chat. Great to have him here as well. And also we got Kenneth Orlando. Great to see you back from the Australian Open, Orlando. We saw you. And a little fun with Orlando. Now also got Grace. Welcome to you. Jim L, BJ, Silas, Sharon, Barat, and many others. Welcome to all. We also have Ray touring around Europe and so on. Oh man, good times. Now, just real quick, this class is on trading with technical indicators. Want to talk about really today daily and weekly charts. I have a question that came in the chat. We'll address it on actually looking at trend types in just a moment and how that relates to trading strategies and also just kind of riding the trend in general or seeing trend change, which I think is really big for many investors and traders. Now, just real quick as we get started, remember the information we provide here today is done for informational purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, also remember that when we talk about options in examples, options carry a high level of risk and are not suitable for all investors. It still would be a good idea to paper trade options to kind of get a sense of maybe is this something you might consider for yourself. We provide paper trading so you can practice strategies in different stocks and see what might fit for you or if something does. Now also remember when we talk about examples, we will do those on the Paper Money software application. Also remember that investing involves risk, including loss of principal. And today, what I really want to talk about is really daily and weekly charts. As I mentioned, what we'll actually also bring up is how you could actually, this class, want to give a reminder, this class is being recorded. And I'm going to share that playlist with you just now. And what I want to do is, first off, this playlist, and thank you, Mike, for covering 2 weeks ago. So this is the playlist for our class. So you don't have to frantically write things down as we talk. Just know that the playlist that I sent out to you will get you to this page, and it's going to show you some previously recorded classes that we did. So share them with others, friends, family, coworkers. Now, want to also kind of talk about here today a question that was brought up, which is kind of really seeing different types of trends and how that might really influence strategy. So now, Mike and I, we've been doing this a long time, okay? And I think one of the hardest things is if you ask someone about trend, they would really give maybe their interpretation. And also what's maybe in their portfolio or how they feel might influence what the trend is actually doing, okay? So we want to try to have some continuity and consistency of how we read the trends. And so there was a question kind of talking about whole moving averages, okay, which I'll show those in just a moment. I want to start with this chart though, okay? So let me share this chart with you. And by the way, if you're watching this on recording, I will put this also in the description, okay? Now, if we take a look at this, you're gonna see that I just sent that in the chat. This is the chart, and I'll send it again. It's gonna be a different link because I'm sending it again. It doesn't matter, it will still get to the chart. But what you're gonna notice is we have a 10-day exponential moving average, which is the blue line. We always use the 10, whether it's exponential or whole for the gauge and momentum. And the red line is really the gauge for the trend. That red line is your 30-day simple moving average. So blue line exponential tries to track the price of the stock more closely, and then you're gonna see the red simple moving average, just an arithmetic moving average. Lags, it's supposed to lag. It's not meant to be something that's really tight. It's to try to give us a general direction of trend, okay? Now, what you're now gonna notice is we have different color candles, okay? Now, there was 1 or 2 people that actually helped me with this, and I feel horrible, but it's been so long that you know who you are that helped me actually kind of do this with the color candles in context. So you know who you are, and we tip your hat to you and thank you. Now, just real quick, the differences in types of trends that we always talk about to have continuity and consistency is really what we call number 1, okay? Number 1 is the price above the 10 and the, price below the 10 and the 30, okay? So just to be clear, when I talk about 10, I'm talking about the 10-day exponential. When I say 30, I'm talking about the 30-day simple moving average. So the key word is there, price is below. Now, right now in the current market, we kind of have some things that might be in the bullish investors' favor, which is VIX is above 18, or at least was. When the VIX is really above 18, prices, when you look at the majority of stocks, you're going to see that a lot of stocks are mimicking what the indexes are doing. Not all of them, as you'll see in just a sec. So if we said, hey, VIX is above 18, what do most trends show? Well, most trends would probably be in a trend number 1, okay? What does that mean? Price below the 10 and the 30. So that means either the investor is looking to get in maybe on that pullback, if it's down near the support level, maybe starting to bounce, etc. They might be looking to get in. So I want to connect this just real quick. So when the price is below the 10 and the 30, this most likely means that the VIX is above, or could be, okay, could be, greater than, I'll just say number greater than 18. Now, here's a first lesson I would, if I could reteach myself again. Do not be scared of trend number 1s. Because this, if you're trying to buy on a pullback, a more material pullback, something where it might fall down to, have fallen down to horizontal support, etc., that's where the investor is really looking to maybe buy at a deeper pullback, okay? So get used to kind of maybe like in 1s a little bit. The key is it still in an intermediate, at least, uptrend? Can you identify, maybe in the last 2 to 3 weeks, a horizontal support level? Now, number 2, price above the 10-day moving average, but not above the 30. Now, what you're now going to notice in this, the red color candles, these are trend number 1s, red, and you go down to the oscillator down below and you're going to see that there's 1, 2, 3, 4, 5, okay? Now, so number 1, you're going to see there's the red color candles. Boo, okay? Now, if we actually said, what is number 2? Number 2 is that lighter color green candle. Why is it light green? Well, because think of it like springtime, okay? It's not like green Kentucky green grass here. It's starting to turn. Price is above the 10, but not the 30, okay? This is really what we would call the start of, okay, bullish momentum, okay, which you're going to see a couple examples on. Bullish momentum. Price is above the 10 and the 30. Now, this is interesting. Now, you could probably imagine these green colored candles, this is where the investor says, I wish I would have been in right there. I wish I would have been in right there. I wish I would have been in right there, and then right there, okay? Why? Well, because the trend tends to go up, okay? Now, does it guarantee that it's going to go up the next day after that? Absolutely not. It's just at that point in time. 4 is when the price is above the 10 and the 30, but it's up near resistance. So when you get these orange colored candles, this is when you start to kind of maybe see a plateau on the stock. The stock's starting to get up near an area of resistance, and that stock is plateauing, maybe started to even pull back. The investor might want to be aware of that. Why is it orange? Well, we think of this like fall, right? Where the leaves turn that orange, burnt orange color. Okay, hook 'em horns. Okay, I'm not a Texas Longhorn fan, but you know what I mean. Now, same thing with this. When you kind of get orange, what does this probably mean? When you start getting 5 or so days or more of kind of neutral price range, you start to get those orange colored candles. Now, what does that maybe mean? Well, the investor might say, well, I might tighten up my stops. B, I might maybe change the strategy from a stock strategy to a cover call strategy. C, the investor might say, I might do a protective put or maybe a collar type strategy, okay? It's the risk of maybe the stock maybe starting to pull back. Now, the opposite of 5 is number 2. We said 2 was bullish momentum. 5 is bearish momentum. Boo! Now, if you take a look at this chart, what you're really going to notice is the purple colored candles don't tend to be very nice. Purple, okay? That's negative momentum. Negative momentum. Negative momentum. Now, if we get purple colored candles, and the reason why we have purple is because if I hit myself on my arm, like hard, which I'm not going to, okay, but if I did, I might get a little black and blue. Now, that's kind of what our profit and loss might be if it pulls back materially. Now, if it goes like if it pulls back and falls down below the 10-period moving average, okay, if it really starts to pull back, it goes back into number one. It's having a more severe sell-off. The red color candles, well, blood, okay? Now it's starting to become more material. Now, if you're in an upward trend, do you want red color candles? Nuh-uh, you don't, okay? If you do get a pullback, if you do get like a trend, you would like to kind of see something where there was orange color candles. If we said it was very strong, just orange, so this would be green color candles and maybe orange, showing kind of maybe like a bull flat. If we actually had something more like a flag, you could probably get green color candles where it's going up, orange color candles consolidation, purple color candles, a little bit more of a pullback. Not as good as the first example. And then if it's more of a material pullback, green color to the upside, orange in the plateau, purple and pulling back, red pulling back deeper. And if we said, well, is that horrible? Well, it's just not as good, because that's kind of what we saw right there, right? If you're having to have the price drop down below both moving averages, there was really more of a severe pullback. Now, that wasn't the question, but we're now ready to get to the question. So first off, we kind of have to have an understanding of what are these really showing. These type of candles are not for whole moving averages, but you could. Remember, the whole moving average is going to take out a lot of the static out of the price. But if we said, could we take this now to the whole moving average? Go to style, chart type, candle, Heikin Ashi. Okay, now you're going to click on that. Okay, click on that. So this is not a script. Okay, it's just it's a candle type. Okay, so now if I go to this, what you're going to notice is, could you still do that with these type of candles, with this type of chart setting? Sure. Okay, you still have the color candles. The whole purpose of really the Heikin Ashi is when trends are going up, not to just get out typically when there's just one or two down days, because just because there's neutral range of price or just consolidation doesn't necessarily mean the trend is over. So that's where I think Heikin Ashi is really beneficial. In other words, if it's trending, it's smoothing out those green candles and it's trying to help you get a backbone, and we all need that occasionally, including myself and Fairborn, is that trying to ride that trend, okay? Because really that's what the investor most likely is trying to do. So I had to first teach you the first part, but if you said, hey, I want to kind of use that with the Heikin Ashi candles, there it is. So you could use both. If it was us, would we use Heikin Ashi with kind of the chart we have? Nah, because what you're going to see is it has a very similar graph to the Heikin Ashi anyway, and that's on purpose. Now, Luke actually says, really need JB to yell at me today. No, I won't. I won't do that, okay? I won't, Luke, no way. That's what your wife is for. Or your brother. All right, a little fun there. So now let's kind of use this, okay? A couple stocks I want to kind of, so just let's real quick, take a look at where the market is, okay? So if you look at the SPX, if we saw red colored candles on the chart, what does that kind of tell us? It's more of a severe pullback, okay? Now what you're now going to notice is it's really fallen back down inside where the range was before. Not really material yet, okay? I think if we looked from the pullback from the high to where we are now, percentage-wise, okay, and said how bad was it? Top to bottom, it was 2.72%. Not really unbelievable, but that's from top to bottom. If we look at from where it topped out to where we are now, it's down, oh my gosh, it crashed 1.93. Okay, when you say that, it kind of sounds ridiculous, and it does, okay? So really what it did is it broke out and it went back down inside this old channel. Not unusual, as you'll see in just a moment. Sometimes when these breakouts happen, sometimes they fall back down and they try to break out again. Sometimes that second breakout's even stronger than the first, as you know. So when we look at the SPX, we would just kind of say it's not changed the trend, but it did snap some of the momentum. What would give us that commentary? Well, you got red color candles and the price, what makes a red color candle? What's when the price drops down below both moving averages. Now, remember what we said before. If we have a red color candle, does that mean like it's horrible? Oh, no. The investor might be looking to try to buy near diagonal or horizontal support levels, which we're sitting at. Okay. Now, if you look at the NASDAQ itself, Friday was a purple color candle. Why purple, not red? Well, it didn't go down below the 30-period moving average. Okay. Now, what I want to do is I want to kind of take a look at just real quick some sectors. When we look at kind of is everything the same? The answer is no. If you look at kind of this, and if as I taught you, the 5 types of trends, and if I told you, for example, like what is the trend doing, these lighter color green candles are really showing us trend 2, trend 2, trend 2, trend 2, trend 2. Why is it darker green? Well, price above both moving averages. Why is it 2? Above the 10, but not above the 30. And you're going to see that it was really in that green color. So here's the deal. If you're trying to be bullish the stock or the sector or the index, the investor is trying to align their portfolio. Oh, I got it. Hold on. I just want to make sure no one's behind me, okay? Let's just keep this between me and you and a little secret. The investors are trying to be bullish when the candles are green. Don't tell anyone, okay? Now, it took me a long time to figure that out because as people, we tend to fight against that, okay? Now, if we look at the healthcare sector, as per our conversation on Fridays, we talk about the investor might just buy the sector. That's a way to do it, not the only way. They might buy some of the stocks that are in the basket. But if we kind of look at this, a lot of people say, I struggle with seeing both flags. The nice thing about these colored candles is the green colored candles, this is what we would really just call the pull. The pull is just price appreciation if the candles are green. How do we see the flag? Or if you're Canadian, fleeg, okay? Well, the purple, I should say this, orange or purple, maybe red, depending upon how deep you pull back, that right there is the flag, okay? That's the flag. So we know that if we saw sideways consolidation, what color candles would you have? Answer, well, it'd be orange color candles, okay? If there was a little bit more of a pullback, well, you get the purple color candles. If there was a deeper pullback, price down below both moving averages, you get red color candles. Now, if you said, what do you want to see? I already told you that. We want to see just orange color candles. It's more of a consolidation. Orange, purple color candles, a little bit more of a pullback. Orange, purple, red, more of a deeper pullback. Now, if all of a sudden we go from purple to orange and then we start squirting green candles, healthcare sector getting a little push here today, okay? So that's one thing we want to kind of take away from so far. When you also look at, let's say, the real estate index, $ IXRE, that's another one. Now notice if someone said, James, I'm horrible about seeing resistance, well, this should help that. These candles are, as you get a different coloration of candles, it tries to help you see where resistance is. If you say, James, I'm really horrible about seeing reversals, well, you shouldn't be now, because if we're in this purple, lighter pullback, red, deeper pullback, James, I can't see the breakout for the life of me. Well, not now, because if you start going lighter color green candles and you get a more of a material breakout to the upside, you're going to go lighter color green to really darker color green candles. So what you're now going to notice is, if we look at this, if we get something like this is exactly what we talked about. If we get a little run to the upside and then we get kind of more of a sideways consolidation, if most of these color candles are orange, that's a shallow pullback at that point in time. Okay? So if you kind of said up until this point, more orange or purple, it's really more orange, okay? Kind of more of a neutral range. Now, if that's the case, that would lead us to think maybe that breakout might be imminent, because the shallower you pull back from the high, the more probable it becomes that maybe that breakout might occur. All right, talked about that. Now, real estate, another one. Keep an eye on that. When we look at, let's say, financials, the one thing I want to kind of point out here with financials is a lot of times we get these drops below horizontal support, but that doesn't mean they just completely crash and fall apart. We saw that last week on Procter & Gamble where we broke down below support and we snapped back up. The other sector we want to keep an eye on this week is financials. Yes, the financials went to a red color candle. Yes, it did drop down below 631. Will buyers come in and step in and support it and push it back up above 631? Keep an eye on stocks like Berkshire Hathaway, Progressive, as we'll look at in just a moment. Those getting a little bid to the upside. And if you look at the staple area, there's just really been some green candles. Okay. So again, let's just kind of keep this to ourselves. Okay. The investor is trying to be bullish when the color candles are green. Okay. Now, that doesn't necessarily mean if they see orange color candles, the trend is over, but it's kind of really more plateauing perhaps and trying to make a higher low. The other bullet point is when we see these upward trends and when they consolidate, we'd like to see where they don't even go to a purple color candle. But if it does, it bounces back up immediately and goes back orange. Orange being more consolidation. And then if we start to see those green color candles come really back in, you're just kind of really seeing that maybe the setup the investor likes, which is the price above the 30-period moving average and the 10. I'm going to tell you right now, so why don't people trade the trends? They don't have confidence in what they're reading. So the main purpose behind this is to try to align what they're taught and that they understand it. And then they have the confidence to trade what they see. Now, let's go to our first example here. Okay, let's go to our first example. So one of the stocks that many of you have been talking about is, we've talked about T-Mobile, right? And, that stock was red, it just red all the way down, okay? Well, what you're now going to notice is it was red, okay? It was red, and then all of a sudden what you're going to see in this case, let me kind of make this a little bit bigger if I can. Try to give us a little bit more room here. We'll have to stick with that. So on the bottom, 2, right? Fell that back down only for a day. Green again, light green, push, little gap. Now what you're now going to notice is it shot to the upside, went to a brand new high. Now, if you've been watching my post on X this morning, it kind of makes you wonder, like, well, what does T-Mobile sell? Okay, now you got T-Mobile. Just watch that for just a sec. You take a look at AT&T. I mean, it makes you kind of wonder, like, what are they selling? Why are those stocks going up so much? And then you look at Verizon, okay? And if you look at Verizon, you're like, wow, that's a pretty decent move. So what are they selling? Well, the trade is not going to be, for our example here today, let's say the cell phone services, but they're not selling rubber duckies or pillows or mattresses, okay? They're selling phones. They're selling phone services. They're selling phone contracts. Now, let's kind of go into the example that we want to pull up, and I want to bring up just real quick Apple, okay? So if you took a look at this, what you're now going to notice is, if I said to you, where do you see horizontal resistance? Where would you say that it is? Now, as I'm getting a number from you, what I want to do in this case is I want to kind of take a look at kind of maybe second question I want to ask you is, do you see a pull? Well, if I looked at this chart and said, where do we see a pull? We know if we're talking about a bull flag pull, the bull flag pull would really be the green color candles. Now, wait. Do you only look at the green, darker green or the lighter green? The answer is yes. Wait, you didn't answer the question. Yes, all of it. So wherever that move started, if this move started at the lower, lighter color green candle, that's where we're gonna draw the line from. So yes. So if I kind of look at this and say, well, where's this bull flag pull starting from and where is it up to now? The answer is, it's probably about right there. Now, we don't know what's going to happen with tomorrow. We don't know, okay? But so far, we're kind of forming a pretty good pull. Who cares? Well, remember, the whole point of technical analysis is to maybe try to ride that trend. If it's trending, the question is, could it continue? That's if it's an uptrend. If it's downtrending and it made a low, could it continue to downtrend? Okay. Now, if you take a look at this, what you're now going to notice is if I said that, the question was, the first one was, where do you see resistance? And many of you said back, James, right around that area. Luke says 250. Okay. And if we take a look at that, Gary actually says 248. Jim L says 250. Stone actually says 247. And I would agree with you. Now, when you're coming up near this area, have we had a strong pullback or not much of a pullback? If we really thought this was resistance. Now, by the way, this begs the question. What does this look like on a regular chart? When I say that, regular candlesticks. Well, let's bring it up to be fair, okay? Well, if I brought this up on a regular chart, a regular candle chart, it looks like as follows. You got a big, large red candle. So the red candle is when the price closes lower than the previous day, when it's filled in, okay? And it's closing, well, that's the main point, is that it closed lower than the previous day, okay? Now, what you're going to notice is, what type of candle is that on the right-hand side? Arami, spinning top, you only got one guess left. Piercing line, okay? But if we give one more bonus answer, that's a bullish engulfing. Now, it's kind of interesting to kind of note the bullish engulfing is happening right up near that area of resistance. Now, sometimes that's kind of like having strong volume on the stock, high volume relative to open interest. But here we're just looking at the candle, the actual movement in the price and at what level. Now, in our first example here today, what we're going to do is we're going to come back to, let's say, Apple itself. And what I want to do is on this, we're going to go back to the paper money account. We're going to type in AAPL. Okay. Now, you got to think about in terms of, this is like in golf, okay? If I stood on the tee box and I could see 400 yards out, I'm not pulling the putter. Okay. I'm not pulling the sandwich. I'm pulling the driver. If the investor said, hey, I feel pretty comfortable or confident in the direction of the stock and I have the capital, the investor might say, James, I'm going to go with the driver. I'm going to pick a strategy that is more sensitive to price movement. Now, if you buy the stock, the investor, just like the driver in golf, you better be right in the direction. Because if you're like me, who doesn't always hit straight, I mean, if you get the direction wrong, left or right, you might be in the whole complete other fairway to go get your pink ball. That's why I play with pink balls or yellow, so I can find my ball, okay? Now here's the deal. I'm going to right click on the ask price. We got the shares brought up. Like we normally do, we're going to take the same amount of capital. So let's say $6,500. $6,500 of stock at this price is going to be about 26 shares. And what I'm now going to do is I'm going to just type in the number of shares, about 20, it's not 26.2, I'm just going to say 26 shares. Now, we're going to buy the stock at the current price level. Now, some of you might say, I'm going to wait for it to break out above the high. That's your strategy. That's fine. For our example, we're going to buy it right at this high, thinking that maybe this bull flag might continue. The prior high on this chart, which is the regular chart, prior high is really right about 258. Now, some news did come out on Apple here today. I think they're hiring maybe 20,000 people. Check me on that. They did also announce that, for example, it was a $500,000 investment. I'm joking. Was it 500 million? 5 million, 500,000, or 500 billion? Okay, and the latter is true. $500 billion investment in CapEx for AI, that might have been the biggest investment we've seen Apple make in a long time. Okay, so kind of the stock trading a little bit on that. Now, what I'm going to do in this case is we're going to put a target right at that prior high, which is right around, let's say, 258 or so. Okay, and I'm going to put it right there. Now, you might say, James, I'm not going to set the target there. I want more than that. That's up to you on that. Now, what I'm going to do in this case is we're going to go back to this and say, look, if we cannot hold this recent range of support, what we're going to do is we're going to set a kind of a stop right underneath that area of 244.32, little plateau. And so if we fall back below that area by 2%, that stop is going to be at 239.43. So 249, is that correct? No, 239.43. Okay? 239.43. Yes. Now I'm going to go day to GTC, 26 shares of stock. So this is trying to play like a little push to the upside as is in that little consolidation. Now, remember, when you look at a stock like T-Mobile, AT&T, Verizon, you should kind of maybe mentally piece together like who's benefiting from that? What are they selling? Now, the other one stock I want to kind of make mention of is we're going to keep an eye on QCOM. Who are some of the suppliers that if Apple's really selling quite a few phones and maybe finally getting some of those last one or two people out there to get rid of those Samsung phones and upgrade. Okay, having a little fun with us. Now, we're still waiting for one or two of you, and I know who you are, and I've talked to you and had a little fun with you. Now, what you're going to see in this case is those stop orders, there's no guarantee of the execution price, okay? Send the order. Now, what I'm going to do is I also want to go back to just real quick, another stock that's kind of had some interesting movement. I want to go back to just real quick, Mo for a second, okay? Now, the next two stocks that I really want to bring up, let me start with Philip Morris. Now, Philip Morris sometimes, you know, there can be a leader in the industry group or sector. Now we know PM, Philip Morris, okay, tobacco stock. Now, when you also kind of think about this, there's other companies that do the exact same thing. Philip Morris, tobacco stock, and Altria, Mo, M-O, Altria does not sell Subway sandwiches. They're in the same area. And so investors might be thinking, wait, if Philip Morris is actually going up, maybe could one of the other companies that's right across the street go to the upside as well? Now, last week, what we did in this, we bought the shares of stock, noted, and then what we did is we also bought the put as well. Can anyone actually tell me what type of strategy that is? You buy the shares of stock and you buy the put at the same time. That's like we call it a married put. You're buying the underlying asset, the shares of stock, and then you're buying the put where you have a right to sell the shares for a certain length of time, till expiration, at expiration, and that is really acting like risk management. Now, what you're going to notice is if we would have known the future, the investor might have said, well, I wish I didn't buy the put. Okay, but you didn't know the future. I didn't either. So the shares are up about $98 and the put is down $12. So the net of this is, well, you're up a net. On one hand, you got $98. On the other hand, you lost $12. So the net of those two is you're up 86.5. So you're up a good percent of what's been available so far. Now, what I'm going to do on this is we're going to try to buy in a little consolidation. Now, let's go back to just real quick the candles again that we've been talking about. Let's bring up MO, okay? Now, if on this chart, if I said, hey, I really struggle in kind of seeing a pullback when it's reversing. Well, what you're going to notice is we had one update right there, and then the very next day it snapped back down. So that didn't last very long. Now, I'm going to tell you right here, get some thick skin, okay? Be a technical analysis rhinoceros. Don't even make me spell that. The reason why I say a rhino is we know that they have thick hides, right? If you get your feelings hurt every time a breakout happens, and then it doesn't work, and then you just take 3 months off, it's gonna probably be tough for you, okay? We know that all breakouts don't work. We know that, okay? That's why you're testing those areas. That's why some people do dollar cost averaging. They don't pull all their full position up at once. Now, if that first breakout didn't really hold and it snapped right back down, the investor might maybe try to really say, I'm going to try it again if it does that. Well, how do we know it's starting to reverse? Well, the first signs, okay, if we're talking about color candles, is really the light green. This is the second time we've seen light green. Now, if we go forward here, what you're going to notice is it falls back again. I'm not sure if that stomp us out, but it goes down again, and it would have probably done if you set a stop below there, it would have probably tested the support again. And then what it does is it shows us the green candle again. Now remember, if this is really going to start to push to the upside, we want to see that stock really get the darker color green candles. Price snapping above the 10 and the 30. And if we start to see this, what you're now going to notice is it goes through the earnings, might have been stomped out over earnings if you had a position. And what you're now going to see is we start to see a lot of green colored candles. What's your What's your favorite color candle? Many might say, I like that dark green, okay? Now what you're now going to notice is, what do you notice about the consolidation so far at this time? Deep pullback or shallow pullback? Well, there's orange color candles. There's a purple one that actually goes orange. So far in this area, a shallow pullback. Now, if you like to trade both flags, you might be licking the chops. Because if we're not getting those red color candles, that means someone is buying on those dips. And how do you know they're buying on those dips? It leaves long, lower shadows near support levels and or moving averages. Now, if all of a sudden we poke our way through that horizontal resistance again, going back to the green color candles, this is where we just kind of see the investors, buying again. Now, what I want to do here is I want to go back to this and try to add to the position. Now, I want to imagine here in this example that we're going to stock trade and we're going to try to buy that little consolidation so far, okay? So the goal is on this is we're trying to get it to kind of play a little catch-up trade to Philip Morris. Now, the prior high on this, what you're now going to notice is that 57 and change threshold. We're going to try to go for a little bit more, not greedy, okay? We're not licking fingers here, okay? And what we're going to do in this case is we're going to go from the prior high to where it pulled back down to. Now, we're going from bodies to bodies where there's more data points. And if we said, where is that 161 extension, please? That's going to give us a target area, and that's exactly what it is, a target 61.96. Now, what we're going to do in this case is we're going to try to do a little leverage, okay? What we're going to do in this case is we're going to go buy a call. Oh my gosh, wait, why would the investor buy a call? Well, they might buy a call because they just might want to have a right to buy the shares. Not an obligation, but a right. Whenever you get a right, it's not free. I have a right, I buy a plane ticket, I bought the ticket, $500. I have a right to sit in that chair and take the flight, okay? So same idea with the call, okay? Now what I'm going to do is I'm going to right click on that. We're going to go to buy, and we're going to go over here to where it says caller synthetic. Now when we say synthetic, we're just trying to synthetically replicate the profit or loss diagram of a stock position. The difference here, we have an expiration. The difference is here, we don't have a claim to the dividend, okay? So if we bought the stock, there's no expiration here, okay? Now, I'm going to click on that, and now what you see is we have a long call and a short put. What is the cost? Well, answer, 29 cents, okay? Or $29. If you have a right to buy the shares at 55, that's where you have a right to buy, and the net cost of this pre-commission is 29 cents, we know that if you just add those two numbers together, it's just easy math. 55 plus 29 cents is 55.29. Why do some people like these type of strategies? Well, because the break even's lower. What's the con of this strategy? The delta's higher, okay? Yeah, if we do the exact same strikes, the delta of this position is 100. It's replicating as if the investor owned 100 shares of the stock. synthetically, okay? Now what I'm gonna do on this is I'm gonna right click on this line, single order, excuse me, first. Gonna actually say first triggers SEQ. And this is where we're actually gonna right click on that and say create opposite order. This is where we're gonna place a target and a stop based on the stock price. So we already know where the upside is, but James will remind me. Fine, I will. I'm gonna go back to the chart. Where's the upside potential? Well, that upside potential is right about 61.96. Now, I'm not gonna put it the high of the high of the high of the high because I believe sometimes that I'm wrong. And I know that. I tell myself every day, I'm just glad I'm not right all the time, okay? And I'm telling you, you gotta get out of your mind that you always have to be right all the time. The only place that tries to beat that into our brains is school. School is not the same as real life. In trading or in other things, we don't have to win all the time. What's more important about being right is actually admitting when you're wrong, okay? That's probably more important. Now, if we look at the downside, if the investor said, well, where am I gonna set my stop? We're gonna take that 10-period moving average, which is at 53.90-ish, less, and I'm gonna take 3%. Because we normally talk about if the stock is lower than 50 bucks, then we're gonna take 3%. I'm just gonna try to give this a little bit more wiggle room, okay? So 53.90 represents the moving average, the blue one, less times 0.97 or less 3%, it's gonna give us a stop at 52.28 or a trigger to exit this position at 52.28, okay? Now what I'm gonna do is let's go back to this and put this on. So let me just write this down myself, 52.28, okay? Now here we go. I'm gonna go back into this, let's bring up the order. So I'm gonna go limit, this is a conditional order, meaning conditionally, don't exit at the target or stop unless the conditions of price are met. So we're gonna go limit to a market, day to a GTC. Not bad, okay? I'm gonna click on the gear, there. Once I click on that gear, now we're gonna say, look, symbol, Mo. Okay, that's not too bad. Didn't even have to type it in, just click right below. Method, mark, think of the stock price. Trigger, we want, so when it's pointed towards the stock symbol itself, we're saying we want the stock greater than the price I'm typing in. I'm gonna type in 61, let's say 61.50, okay, or 61.96 is the exact number I gave before. But if we kind of shed it down a little bit or lowered it, we're saying we want Mo, the stock, higher than or greater than 61.50. That if it does, exit the options. Right below that, second row, click on that, Mo. This is the downside, Mo, mark. Less or equal to, so if Mo, the stock, is lower than, and we just told the stop loss or the trigger to sell, 52.28, okay? So this is really like the synthetic that we've actually had on Verizon, which I'll just quickly show, okay? So what you're now gonna see is we need to verify, do not assume. The numbers that we type in here, we wanna make sure that we put eyes, okay, and see that those numbers are down there. Before you even click save and send the order, we want to make sure when you type in the numbers and you press enter that it has the target and the stop. Verify, okay? Save the order, confirm and send. So this is what we call a long synthetic, okay? Using a combination, hence combo, of a long call and a short put. Two bullish single option positions. Delta positive, delta 100, or close to it. And now what you're gonna see is, what's the commission? Well, you're buying a call and selling a put, $1.30, and we're gonna go ahead and say send that, okay? Now, the last thing I wanna really say here is if you said, well, do we have an example of one that we've done this before on? Yes, in closing. When you look at this, what you're gonna notice is this is what a synthetic looks like. Buying a call, which you want that call to be higher than what you bought it for, makes sense. And the short put, in this case, you want the price of the put to drop so you can buy it back for cheaper. Now your homework assignment, I want you to practice using these color candles. Can it help you see support? Can it help you see a reversal, a bullish reversal? Can it also help you see resistance? Can it also help you see maybe severity of the pullback? Can it also help you show maybe stocks that might be in a consolidation that might lead to a breakout? These are all things that I think the investor could use this type of chart for. So I'm out of my time here today, and the saddest part of my day is when the 45 minutes has blown by, okay? Literally. Now, I want you to remember that you can also go to our YouTube channel. If you have not done so already, you can subscribe for free, okay? So on the page, the link I just sent you, you're going to see that you're going to notice that right in the middle of the page, if you have not subscribed, click on subscribe. Also remember that this link that I just sent you here, this is the playlist for this class. I want to thank Michael Fairborn for answering those questions in chat. And also remember that we have another class coming up right at the top of the hour. And that class coming up is on trading cover calls and short puts. Stay tuned for that. Remember with what we discussed, it was done for example, illustrative purposes only. This has been the class on trading with technical indicators. Thank you so much. Take care. Bye-bye.